Hello, and welcome to another update video about the DXY US dollar index. We're starting a new trading week and we are currently following the roadmap. We've done something interesting. We've broken a critical trend line and we're going to zoom in and take a look at what that might mean. I also take a look here at my longer term outlook, medium term outlook, so that you know what I personally expect about the near future in terms of the DXY and the price development here. So I won't go through the entire chart, but what you need to know, because we did that in the previous videos, what you need to know, I think we completed, that's the primary expectation, we completed a 5-wave structure, here, 5 waves, in October this year. I call that a leading diagonal. It's an Elliott wave pattern. In a leading diagonal, you have certain rules to fulfill and to adhere to, but waves 2 and 1 can overlap here. That's absolutely not a problem. That's often a question I get. Not a problem at all, and also wave 3 must not be the shortest wave. They're just 2 of these rules, but of course there's more complex stuff going on here, and it's all about the subwaves as well. Do they work out? Do they match? But my view is that we have a good chance that this wave 1, basically the wave 1 of the higher degree wave 4, which belongs to this high degree wave 5, which belongs to this wave 4, the same wave degree, that this wave 1 has been completed and we're now coming down in wave 2. So wave 1 was completed here in this 5-wave structure, and now we are in this ABC correction to the downside. That is only currently just still ongoing. I think we're still in the A wave and we're going to take a look at that. There is one other scenario. I just want to mention it. It's not my primary expectation. In the short term, these are very similar. And if you've watched my previous videos, then you will know about this scenario. And this scenario assumes that we haven't peaked here in a wave 5 of 1. It was only a 3rd wave where we peaked, and we are coming down now in a 4th wave, and we'll make one more high in a 5th wave, and only after that we will come down in the wave 2 correction. That is not my primary expectation. It doesn't work that well in terms of the proportions, but an ideal target then, should we really have one more high in a 5th wave, we probably aim at getting to the $121 level, which is the wave B high, a very important structural high from 2001. So primarily I'm going to focus on the scenario that we peaked here and we come now in this ABC pattern. But please be aware that short term, these two scenarios I just explained, they are moving in very similar ways and you will not notice a difference in the very short term. So if we zoom in, I've got one interesting development after my last video here. So we obviously, I have to go to the 4-hour chart. We obviously talked about that we peaked here. It's a so-called truncated wave 5. That's also one reason why I think there is a good chance that we, could see this 4 and 5 still unfold. But from here, my assumption is currently, and it sort of worked out quite nicely, that we came down in a wave A, we moved up in a B, and we're now coming down in the C wave of higher degree, wave A. After that, we would move in B and come down in C of 2. This wave A, how does this unfold? So in this wave A, again, it's an ABC structure, but we're currently in the C wave, and the C wave consists of 5 waves. The wave count is unchanged from the previous video. We're just purely following currently the wave count. So 1, 2 already done, the wave 3 down already done, the wave 4 probably already done, and we're now in this, the 5th wave as well. No, I showed you the wrong count. We look at the blue count here. The white count is purely the subwave structure of the blue count. So 1, 2 done, wave 3 done, and now we are most likely in this blue wave 4, and we will come down once more lower in a wave 5. That would be my primary expectation. It could be that the C wave is already complete. That we completed this already here. I could count that slightly differently, but that's not the primary count. This is the primary count. And as I just said, it could be the wave 5 of C is already complete. What do we do with that information? Well, what do we do with that information? We need to understand at what point does the assumption that we will come down lower once more, when will that get invalidated? Now, for that purpose, we draw the retracements of wave 3, and we can see that the ideal target for a fourth wave is actually the $107 level, the 38.2% fib level. That's very close to where we've got that previous wave 4 high. So I am quite optimistic that we could get to that level, get rejected, and then come down. Or we could push a little bit higher to $107.73. That's the 50% retracement, but at the latest we should turn around there. If we do not turn around there, then this would be a very strong signal that a bottom has been made down here already in wave 5 of C of A, and that we are pushing to the upside in this B wave. Yeah, so that the low has already been made. But we will not know that until we make 5 waves to the upside and get above the $107 level, 73 cents. Yeah. It's of course already worth watching as soon as we get above the 38.2% fib level. But yeah, you know, we are basically just doing what we talked about in the previous video, that in this wave 5, no, sorry, in the blue wave 4, what we would expect ideally is an ABC pattern. And should we break below $104, obviously the idea is that wave 4 was already in, but it was not the primary expectation. Primary expectation was that we go a little bit higher here in a C wave or 4 before we come down in 5, and that is exactly what we might be seeing now. It's also why I make one update here today, because you can see that we're breaking out of this so-called descending wedge. Now that could mean that indeed a more substantial low has been made here. But at the moment, my primary expectation is just that we go higher short term. Next resistance is here, the wave A high, and then of course this $107 level that I mentioned. Ideal target for the C wave, we can calculate that as well. It's just a different way of how to calculate a target. First target would be the $106 level, and the second target $107.23, the 1.618 extension. And that is both working out quite nicely with those Fibonacci retracements that I just mentioned to you. So given that we've just broken above the wedge, my view is now we are pushing a little bit higher here. Should we, however, turn around and break below the wave B low at a $104.50, then I think this is not going to work out, and we're indeed heading down lower in wave 5, maybe into the region between 100 and 103 US dollars, before we then finally bottom there, make a low, and move higher in this B wave that we talked about. So it should all be clear. Yeah, you should now know about all of these key support and resistance levels and the invalidation points for the current wave count. You should now know my primary expectation, also the primary expectation on the short term, and when those expectations will change. Yeah, hopefully you liked the update about the DXY. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then also check out the channel membership. Thanks a lot for watching. Bye bye.